Welcome to the Ultimate Trading Podcast for beginner traders. I'm your host, Isabel Maria, and today we're diving into an incredibly important topic: accepting losses and learning from them. This is tip number 33 in our trading psychology chapter. If you're new to trading or you've been struggling with the emotional side of trading, you're not alone. Every single trader, at some point, has faced losses. It's part of the game. But how you handle those losses? That can make or break your success as a trader. So let's talk about why accepting losses is a skill you need to develop, how you can learn from them, and how the right mindset can turn a setback into a comeback. Trading is all about managing risk. The market offers opportunities, sure, but it's not a guaranteed path to riches. You'll hear stories of traders making huge profits, but you'll also hear about the countless others who lose, sometimes a lot. And I don't say this to discourage you, but to ground you in reality. Because the sooner you accept the idea that losses are inevitable, the sooner you'll be able to cope with them and, more importantly, learn from them. Many beginner traders, especially those who come in with high expectations, often forget about the risk part of trading. You see, there's this idea that trading is about making big wins. We see people on social media posting about their huge gains, and it's easy to think that that's the norm. But what's rarely shown are the losses, the trades that didn't go as planned, the mistakes made along the way, the failed strategies that didn't work out. Here's the truth: if you're trading and not accepting that you're going to lose sometimes, you're setting yourself up for failure. Losses are not something to fear or shy away from. In fact, they're an integral part of your growth as a trader. The key is learning to handle them in a way that doesn't derail your entire trading journey. The best traders in the world don't avoid losses, they accept them and they learn from them. Let me tell you about Sarah, a currency trader I worked with who faced a lot of early setbacks. Sarah had a good grasp on the technical side of things when she first started. She understood chart patterns, she knew how to read indicators, and she had a solid strategy. But like most of us, she was emotional about her trades. She wanted to win, and she wasn't prepared to accept losses when they came. And guess what? They came. A lot. She had a series of losses that wiped out a large part of her capital in just a few months. Can you imagine how that felt? The frustration, the self-doubt, the feeling of wanting to quit. I've been there myself. In fact, her initial reaction to the losses was just like most traders, emotional. She doubted her abilities, she was frustrated, and she seriously considered giving up. But here's where she made a key decision: she didn't quit. Instead, she chose to view her losses as a chance to learn, not as a sign of failure. And that's where her journey started to change. Sarah took a step back and began analyzing each of her trades. She wasn't just looking at the trades themselves, she was looking at the why behind each loss. She asked herself, was it a flaw in my analysis? Did I rush into the trade because I was emotional? Was I over-leveraged? She found that many of her losses stemmed from a lack of risk management, specifically, over-leveraging her trades and not considering the broader market context like economic reports or geopolitical events that were affecting currency prices. Once Sarah understood the why behind her losses, she was able to adjust her strategies. This is so critical, my friends. Losses are the best opportunities for growth, if you approach them the right way. So, here's what she did. First, she implemented stricter risk management. She never risked more than 1 to 2% of her capital on a single trade. This simple change helped her keep her losses smaller and less impactful. She also began using more conservative stop-loss orders to limit her risk. She wasn't afraid to take a loss, but she wasn't willing to let those losses hurt her in the long run. Next, she started to incorporate more comprehensive analysis into her strategy. Sarah had been mostly relying on technical indicators, but after reviewing her losses, she realized she needed to pay more attention to the fundamentals, things like economic reports, interest rate decisions, and geopolitical news that drive the currency markets. Once she started incorporating this information into her trades, she found that her decisions became better informed and her success rate improved. And here's the final thing that helped Sarah turn things around: she got control of her emotions. Sarah knew that emotions were her biggest enemy, especially when it came to trading. When the market wasn't going her way, she would panic. When she saw a potential trade set up, she'd rush in without considering all the factors. To fix this, Sarah started practicing mindfulness. It wasn't about meditating for hours or anything like that, it was just about taking a step back, breathing, and focusing on staying calm, even when things didn't go as planned. The changes Sarah made weren't instantaneous, and she still faced losses, but they were smaller and less frequent. More importantly, she learned how to manage those losses better. Her risk management improved, her trading plan became more robust, and her emotional control allowed her to stick to the strategy even when the market got volatile. A year later, Sarah's trading performance had significantly improved. She wasn't just surviving in the market, she was thriving. She had turned those losses into learning experiences, and in doing so, she created a more resilient and profitable trading strategy. Her trading journal became one of her most powerful tools, not just for tracking trades, but for reflecting on the decisions she made, both good and bad. I want to ask you, how do you deal with losses in your own trading? Are you able to see them as opportunities to learn? Or do they get you down and make you question everything? I'd love to hear your thoughts and experiences. Drop a comment down below, and let's talk about how you've turned your losses into learning experiences. So, what's the takeaway here? Losses are not the end of your trading journey. They are, in fact, part of the process. Every loss has a lesson. The more you analyze those losses and understand what went wrong, the more you grow as a trader. And with each lesson learned, you become better equipped to handle the challenges the market throws at you. As we wrap up this episode, remember, trading is not about winning every time. It's about managing risk, learning from your mistakes, and improving over time. So, embrace your losses. Accept them. And use them to come back even stronger. That's how you build a sustainable trading career. Thanks for listening, and I'll see you in the next episode of the Ultimate Trading Podcast for beginner traders. Keep learning, keep growing, and most importantly, keep trading with confidence.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.